For more on this market and the comeback today versus what happened yesterday that led to that sharp sell-off, let's also bring in Kevin Caron, the senior portfolio manager at Washington Crossing Advisors as well. Kevin, Michael laid out some very interesting points and valid ones for anyone who's been around the market for as long as all of us have been. Markets can go lower, especially when they've been set up this way. Is there cause for concern about the state of this bull market rally, given what you saw yesterday?
Well, the near-term cause for concern would be that the market came too far too fast, just as Mike said. And when you look at what's been happening with interest rate expectations throughout the fall, basically the market has started to discount in some easing next year. And when the Fed signaled a pivot effectively last week, taking 50 basis points off their forecast for next year, where they thought rates would be, markets were quick to jump on that. A little bit of euphoria, I suppose. But I guess in the end, what's going to happen are one of two things. You have to, avoid a actual recession. And then number two, the Fed's going to have to deliver on the rate promises to achieve this soft landing scenario. So you've set the market has now set a bunch of expectations that are going to be challenging to fulfill.
Kevin, it was an index-wide sell-off yesterday. Everything kind of moved, and you got the feel that there was a lot of selling pressure across baskets of stocks as opposed to individual names. Did you feel as though, from a portfolio manager's perspective, that there were opportunities created given the sell-off that we saw yesterday?
Not really. I mean, we've had a narrowly led market all year long. And then when you look at where the market was positioned, most traders or technicians would say that the market was overbought going into the session yesterday. So I think traders were looking for a reason to lock in gains, and they found that reason yesterday, having the market had such a strong run over the last several sessions.
Oh, Kevin, your stock picks, I think, are kind of fun and interesting. Texas Instruments is kind of the one semi-name that hasn't really performed this year. And Norfolk Southern, we don't really hear much about the rails other than, we were talking about what's happening down at the Texas border last hour, but you don't hear much about them. Stock's down 6% year to date. Why do these two names jump out to you as names that you like for 2024?
Yeah, well, these are names that are very good quality names, and they've held up very well whenever the economy was stressed. Ultimately, what we're looking for are companies that have very good balance sheets, and both of them do. We're looking for businesses that are predictable, that have very profitable assets too. At Texas Instruments, essentially, it is a less exciting company in the technology space for sure. But if you look at their business, it's very steady, very predictable. And so if things were to get rocky next year, we think Texas would do fine. And they potentially have they're potential beneficiary of onshoring in the CHIPS Act. And the same can be said for Norfolk Southern. Frankly, they've got a very good business. They've got a little bit of work to do in terms of retrenching and spending some money on CapEx. But the stock has basically been overlooked and offers a very good value here.